Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today is a self-made millionaire who has been featured in the Wall Street Journal, ABC World News, and Forbes.com. He's also the host of the successful YouTube channel, Vision Victory. Daniel Ameduri is the co-founder of the Future Money Translator and the Wealth Research Group. Daniel, welcome to Purchase to Profits. It's great to have you on the show.
Thanks for having me.
Yeah, I'm really looking forward to this. You're a guy who's doing some really cool stuff, and today we're going to talk about the real estate side of things. So it's my pleasure to have you on the show.
I appreciate it, and I love real estate.
Yeah, who doesn't, right? So to kick things off, tell us about your real estate goals right now.
Right now, I'm mainly focused on larger developments, so anything 20 units and above, typically buying them with other investors. So I'm not running the deal or managing the deal anymore. It's at this point in time in my life, it's much easier for me just to partner with others and use my money or, perhaps, consulting on a consulting basis, just, guiding them on how to raise the funds or make the acquisition. So my main goals right now is just preservation and capital. I could tell you 20 years ago, I was probably trying to get rich and had ups and downs and crashes and all these things. But at this point in time, I'm looking for high quality properties. So whether it's owning a piece of a JW Marriott or a Walgreens, or even having investments into structures that are luxury apartment buildings, I'm looking for preservation and cash flow.
Yeah, and at what point did you make that transition between, let's say, acquiring properties and then switching over to development? Was there a big shift at some point?
I would say there was when I had become financially independent from passive income from single family homes and multi-units up to 4 units. Then I began to say, it does get a lot to manage. If you buy a bunch of single family homes, some of these municipalities and regions have 2 taxes that are coming in. You have your insurance, you have your property managers, and it begins to be a lot. And I just didn't want to, risk, missing a tax bill or something and screwing something up. So I was like, I've got enough of these physical properties that I own and I'm on title to. Now I want to start getting more involved in development, but I'm ignorant of it. So I just started partnering with people who'd already been doing it.
Yeah. And what changes did you have to make about how you thought about real estate to be able to go from that single family to developing, because there are different skill sets that are involved?
Sure. I mean, the confidence. I think a lot of times the financial moat that a passive income portfolio will give you will ultimately give you the confidence, because, in the beginning, one mistake could really set me back or make me start from scratch. Today, the money being used, if it was, vaporized or something with a bad investment, it's not going to change what I eat for breakfast tomorrow morning, because the moat has been built. And that was, my mindset at 18 years old was just to get rich. After 2008, it was to not be poor. So just keep that in mind. Like, we're all going to have different mindsets based on our experiences. This focus on preservation and cash flow really didn't come until after 2008.
Gotcha. And was there, I've heard that you had an interesting experience in 2008. Can you elaborate for the listeners?
Yeah, I was on YouTube predicting the crash and thinking that I could just squeeze in a few more. Ended up buying, I think, like 12 properties, had all of them foreclosed, all of them short sale. It was a real disaster. At age 18 years old in the year 2000, I was buying property in Southern California. So you can imagine my mindset by 2006. I'm thinking I'm a genius. No matter what I buy, it goes up 10,000 a month. And so in 2007, I did see that it was going to fall. So I started telling everybody and making it very public that I thought people should sell real estate. But I thought I was so smart and had such a pulse on the market that I would be able to just get these last ones in and cash up. And of course, it didn't happen because I confused a bubble with brains.
Yeah. And was it a matter just of over-leveraging, or what was kind of the thing that knocked over all the dominoes?
I had made so much from the year 2000 to 2007, 2006, that I not only took it all and put it back into the market in 2007, but I did it as leverage as possible. And I also left my comfort zone because I wanted to go for the maximum capital appreciation or gain. So
Yeah.
I was for most of my real estate investing career in the younger years, I was in the range of 200,000 to maximum $400,000 properties. Well, by the 2007, I was buying, $800,000 or $900,000 houses, trying to flip them for $1 million or over $1 million. And of course, it all became one big disaster.
Yeah. And so, you recovered from that setback. What sort of things were you telling yourself as you were clawing yourself back from that? Because I know lots of the people watching this, they've experienced some ups and downs in real estate. What sort of mental focus or messages did you need to keep telling yourself?
It was a very difficult time. There were times where I was ready to throw in the towel and just not try to be wealthy anymore. And there was times where I just didn't see how I was going to do it and just was going to settle for less. So, but one thing we did have one rental property left, one duplex, my wife and I, and the duplex continued to pay rent. In fact, we were even able to raise the rent. Now, so it is in the South, but the property went from $120,000 to about $60,000 in value, but the rents went from $1,100 to about $1,300 or $1,400 over that 2-year time period. So that was a great lesson for me, that ignoring the volatility, I still had an asset here that was cash flowing. Yeah. And that is one of the things that I took with me from 2009 onward, was that I no longer focused on appreciation. Now, appreciation is nice, and that's probably the best part about real estate, is because, as anybody knows who's owned a single family house, one roof damage or something like that can wipe out a decade of cash flow. So the appreciation, you definitely want to have it, but in order to make the asset sustainable, it has to cash flow. It's just a must.
Yeah. And so now you're doing these larger projects. Can you speak about how you think of building a team around you that allows you to take on these projects?
Yeah, I think, the most important thing with any business, because these are all businesses, a lot of times people don't think of it, but you're running a business, even if you have just one single family house, and you have to make that decision. Do you want to be the slumlord, or do you want to be the Marriott or the JW or Ritz or whatever? You have to over deliver for these people. So that was one of the lessons I learned. And then I wanted to find a team of people who thought the same way. And that is probably why I ended up in the higher end developments, just because I'm not looking to just build some slumlord thing in the ghetto, or depend on the government. I want to have high quality properties with high quality tenants and over deliver for them. And of course, the people who manage them, always look for people who are already doing it, who have had some success, and who are all in, that this isn't their part-time thing. I don't want to work with somebody who, whatever, they have a day job, they're a police officer during the day, and then they've got this real estate development. No, I want to work with somebody who, this is what they do. They focus on this stuff and they're laser focused on it. So I think building a team, you don't have to know that much, to be honest with you. So a lot of people always think that you got to be an expert in these things. No, you don't. You just have to find the experts, which isn't hard to do. Just make sure you're partnering with the right people.
Yeah. And in your business right now, do you have any routines or rituals that you follow, maybe daily or weekly, that helps keep you focused?
I like to meditate, and I'm very focused on gratitude. In fact, is this going to be on video when it posts?
Yeah,
I'll tell you what's right over my head. So I have this big thing when you walk in my office. I don't know if you guys can see it, but it's thankfulness.
Oh, that's cool.
There's a bunch of things written all over my office, but it's all about gratitude. So I do spend about the first 10 minutes of my day just in a spirit of gratitude and just meditating on things that I'm thankful for. I try to go over 3 significant things that I'm grateful for, and I can feel deep appreciation for. That's how I start my day. And then as far as focusing on the business and what I need to do, it is very important for people. I kind of do it at night. At night, I write down all the things that have to get done, and I do those things first. It's very good to have those accomplishments, and it kind of builds some momentum throughout your day.
Yeah. And are you, as you have a project on the go, are you a type of guy who's daily meeting with the people involved?
I personally don't. I'm not a big one. In fact, my old saying is I think meetings are a place where productivity goes to die. So
Yeah.
I tend to like people to do what they need to do. If I do need to meet with them, maybe I'll meet at a property, or maybe I'll meet them at a restaurant or go for a walk or something. I like to get the bullet points out of the way, and just everybody on the ground focused on what they need to do to accomplish their tasks. And for example, if it's a real estate development, you might have a lot of permits and city things you need to do. So, I always look for my own network and own resources. There's always somebody who can help you get things done and,
Yeah.
accelerate them.
Yeah. So let's switch to a Keystone deal. So deal that made a big impact on you and your business. Is there one that comes to mind?
Yeah, I've done this several times now. With the foundation problems. So I used to be scared to death of properties with foundation problems, whether it's multi-unit or single families.
Yeah.
I bought a home that I really wanted and had a foundation problem. It turns out that it's not a $50,000 problem. It's like a $4,000 problem or less. I mean, I've paid $3,000 a baby base. I think the most I've ever paid is $6,000 to fix foundation problems. So that was an important thing, because I made a ton of money from foundation problems because nobody wants to buy them. And really nobody can buy them because the banks will not lend on a foundation problem. So I don't necessarily write a check for these properties. A lot of times I'll just assume the current underlying lien while I make the foundation repair. But I think that was one of the most important things that I learned in real estate was to really not focus on the things that everybody is focused on, like paint, carpet, blinds, but focusing on the things that people hate, because that's the only place you're going to get a real deal. Paint, carpet, blinds is 10 to 20% off max. We throw in realtor commissions to repair. There's barely any margin for profit. You find a house that is caving in on the second story, you're going to get that sucker for 75% off.
Yeah. And so for like, how did you even discover that niche of the market? Did you just stumble upon it?
Yeah, I was just buying a personal residence, discovered how cheap it was, because I'd actually come across this problem before. And I would immediately just walk out. I was like, no, that's not what I do. I don't foundation problems. Shit, I'm thinking all kinds of crazy things.
Yeah.
Turns out it's really not that big of a deal, honestly. But the great thing is it's a $5,000 problem that completely red tags the home for any other buyer. So think about how much competition you lose. You lose all your first time buyers, you lose all your regular residential buyers, and you lose most of your investors because they want nothing to do with it. And if they're not a cash buyer, you almost lose all the non-cash buyers because they're ignorant of just literally telling the seller, look, you're screwed if you don't get this property moved. Sign the title over to me. I'll make the payments for a year and I'll sell this and I'll make this work for you. Or what do you need? You need 10 grand. Here's your 10 grand. I need you to sign this thing over to me. So outside of having that small, minute piece of knowledge, which most don't, most people won't even touch this. So I like dealing with that because there's nothing worse than being in a real estate market or trying to acquire property when there's 7 or 8 offers on the table. Mm-hmm. That you're just guaranteed you're not going to get a good deal.
Yeah, no, and especially in hot market, I live in a hot market. Lots of people are trying to invest in hot markets, but I think, what you brought up with that specialized knowledge and applying it to solve other people's problems that nobody else is touching, I think that's amazing.
Yeah, and going into areas that might be undesirable to other investors. Obviously, if you're chasing cities and regions where all the investor money is, the problem is the dumb money is going to go there. And when the dumb money goes there, things get overvalued and unaffordable, and they don't make sense.
Yeah. So what's your take on selecting a market for investment? Are there key things that you're looking for when you're trying to avoid that dumb money?
So if I'm running it, it needs to be an area I understand and know, because I've noticed that every region I invest in, I learn things about them. For example, in Texas, there are a lot of foundation problems. So I learned that. In California, closer to the beach, I've had issues with either cliffside issues, getting the damn permits from the government, and different rusting issues with their pipes. In a southern state like Tennessee, in certain areas, you have to remove like the air conditioner every time the property goes vacant. Otherwise, it will get stolen. there's just a lot of stuff out there that you got to learn for each area. So if I'm running it, I need to know the area. But if I'm not running it, which is most of the time nowadays, I just want to make sure that people understand what they're doing. So if it's a Las Vegas citizen, person born and raised in Las Vegas, and now they want to take my money and start an apartment building in Maine, okay, that's fine. That can work, but they better have somebody who's an expert in that area, in that region, because things are going to come up. So in the end, you're going to want to have a great property management company. One of the criteria I try to find is I look for those big property management companies. I don't want the mom and pop shop. I want the company that's probably charging me a little more than I should pay, but they're the McDonald's of property management and they know what they're doing.
Yeah, I think that's one of the best tips we've had with property management. Just because I know people myself who they've gone with that mom and pop operation and things always go off the rails pretty quick.
They really do. I've had property managers just go away. I have friends, he's probably going to watch this interview because he loves real estate too, but we both bought some KB homes in Texas about 2 years ago. He went for the property management company that charged him $35 a month. His 2 properties sat vacant for 6 months, and he finally rented out these single family homes for like $1,900. Yeah. I just immediately off the bat went with the guy who charged 10% and who was the McDonald's of that whole region. And you know what? The thing got rented within 3 weeks for $2,250. The tenants just re-upped for like 2 more years, $2,350. I mean, that's the difference. Sure, I paid a little more, but these mom and pop people who are running the whole thing on their cell phone, you're setting yourself up for disaster.
Oh, 100%. So, Daniel, how has getting involved in real estate changed your life so far?
It's the easiest way to start a business. And I think I really teach my children this about, focusing on the customer. So when I always explain to them when a tenant pays a physical check or something comes in the mail, I'll show it to them. Might even have them do the mobile app. But the fact is, these are businesses. And I think that mindset is very healthy to understand that the tenants are your customer. They're not your enemy, or they're not something you're supposed to just squeeze from. They are a customer, so take care of them. So I think it's helped me become a better businessman owning real estate. And also owning real estate gives you financial security because unlike a regular business where you have to close deals or continue finding acquisitions or clients, once you get the customer in a unit, there's a good chance they're going to stay there for a year or more, and they need it. The roof over the head is not an option like a cheeseburger. It is something that has to happen. So I love real estate. It's a very safe, consistent business. And I know people love to compare it to the stock market and all these things. But honestly, to me, it's the master asset. And I'll give you a great example. I went to a wealth conference a few weeks ago, and it was for people who have net worths, I believe liquid net worths of over 50 million or more. I am not at that level. But of course, that's never stopped me from showing up and saying, what are you guys talking about? Yeah. And I'll tell you, all of these very wealthy people, there's billionaires in there as well. It's very focused on real estate. And you'll notice this, that Wall Street titans, they make their money on Wall Street and they bury it in real estate. It's a very smart strategy, no matter what you make money at, if it's not real estate, but to preserve it in real estate.
Yeah. And looking ahead, let's say 5 to 10 years, where do you see your business going in that period of time?
My real estate portfolio, I'm definitely looking at bigger projects. I'm very focused on setting up my own family office and having our own family fund that would be more actively involved in real estate ventures. So that's where I see myself moving towards over the next 5 years, and really just to continue looking for high quality projects in sustainable areas. I'm not looking to have. It's such a trap to buy a cheap property in, let's say, Barstow, California, or buy a very cheap house for $5,000 in Memphis, Tennessee. It is a cash flow trap. It only looks good on paper. And that is one lesson I've learned. You want to buy the B and A properties, maybe C occasionally, but only if it's in a good area. Like you could buy a C property in Austin, Texas or something where it's booming and it's just only going to get better in that area. But, in Southern California, for example, I would be looking for Los Angeles and major cities. I don't want anything to do with the desert areas.
Yeah, no, for sure. So, Daniel, if somebody's looking to get in touch with you, learn more about what you're doing, where can they find you?
You can go to futuremoneytrends.com and you can subscribe free to our weekly wealth digest. It not only shares my own personal journey, but we have a wealth strategist as well who's going over all the different ideas that we do. And most of it is focused on cash flow, but we also do venture capitalism as well. The subscription is free. Love to be able to share my thoughts and ideas with you, as well as we have a book coming out, or I have a book coming out in about 2 months. So I'd love to share that with you guys as well.
That's awesome. Well, Daniel, just want to say thanks so much for taking the time today and sharing your success with us.
Thank you, Seth.
Yeah, my pleasure. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.